Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In these updates, we talk briefly about the news that affects the markets, and then we try to put it in perspective using our Elliott Wave charts. In this video, we'll talk about the symbols as you see on your screen here. And remember, if you want to look at just a specific symbol, you can click on that using the chapters feature in the video and go directly to it. With that, let's get started. Well, the big economic news of the week was the release of the CPI report, where the expectation was for some sort of cooling to show, but the headline number showed up at plus 0.1% when the expectation was for at least a drop of a 0.1%, with the drop in oil bringing the overall number down. Ex-food and energy, what they call the core CPI, so taking food and energy out, rose 0.6%. Both of those numbers were hotter than expected, giving the view that the Fed has free rein to continue to raise rates, going too far, as my opinion and others feel like they're going to do, in raising rates and putting the economy into a recession. In the crypto world, we had Ethereum, which did their transition from a proof of work to proof of stake transition. Many people thought that would be a good thing. Did the market? And then Fedex shocks the market last night with a pre-earnings warning citing a global slowdown. How did that affect the charts? Let's take a look. Before we get to the charts, if you like these recordings, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks, we really appreciate it. It is helpful. All right, taking a look at the charts, a couple of days ago during TradeFinder, and by the way, if you haven't signed up for TradeFinder, please do so. You can do it underneath this video or go to our website at ewotrader.com. On Tuesday nights, 9 p.m. Eastern Time, we talk the markets, we look for trade ideas, and we have a live Q&A at the end. We were talking about the market setting up for this potential move lower, and then if we take the Elliott Wave pattern off and the moving averages and bring into where we are today in the market, we're focusing on this zigzag pattern. This is what we were focusing on in TradeFinder, where we see support down there at 380, but we have that C wave right at the 61.8% level now. But when you have a 50 or 61.8% B wave correction, normally the C wave extension goes down to 100%, and that's going to bring us down past that 380 level, all the way down almost to those lows that occurred back in the area of mid-June. So, I mean, almost exactly on that spot where we had the doji back on June 17th. So I think that's something that we need to take a look at. And then taking a look at the weekly chart, we had a question on this as well during TradeFinder. Again, we have a live Q&A, so I'll take the zigzag pattern off here. And then we'll take a look at a triangle pattern that we had on the weekly chart. So there's the Elliott Wave pattern, and if you take this week off, so we'll just walk it back a week, you can see that there was a pretty significant symmetrical triangle, very well formed. Looking at where are we going to go from here? Now the wave 4 correction's at 57%. We can go down to 61.8, which means just a little bit below there, which would be right about what the expectation would be from a downside breakout from here. And then you add this week's move in, and you can see we're trying to sneak to the downside out of this corrective triangle. However, it is important to remember that when you have a breakout of a triangle or break of a major moving average, some point of support resistance, you have to have a second day, a follow-through or confirmation day. So this week is a little bit of a break to the downside, but will we get follow-through next week? That's going to be the key on whether or not we are getting a clean breakout to the downside of this triangle. I think it's important to look at the VIX too, because to me this is the most concerning aspect of the market. We had that big down day today. We did recover towards the end of the trading day, but the VIX is just not showing any sort of significant fear. Can we put in a legitimate bottom, or have we put in a legitimate bottom without a higher spike in the VIX. I still believe we need another spike above 35 up near 40 with a cathartic sell-off low in order to really put in a bottom. But that's just my thoughts. That doesn't really mean anything. We look at the charts when we're analyzing the markets. We're technical traders at Elliott Wave Options. But from experience, you would think that we need something more than a VIX at 28 to put in a legitimate bottom. When we take a look at the diamonds, you can see that we're moving to the downside. We also have a clean zigzag on the diamonds as well. And you look at that, call that the 38.2% B wave correction. Now we're getting in the area of where you would expect the move to be, which is 61.8, which does coincide with where the significant support would be on the diamonds. We're not quite there on the SPY, but we're pretty close on the diamonds. So is the Dow going to lead us higher? That would be pretty interesting to see. Looking at the Qs, and again, another zigzag. It's zigzag country right now with all of the charts. And so again, the 38.2% B wave correction. So that leads you to a 61.8% C wave extension, which is exactly where we are. You would look at this and think that it's likely that we should come down to 280, but that would require an extended C wave. An extended C wave would bring us right down to test those June lows, exactly at those June lows with a 100% extension. Could that happen? Happens all the time. But could there be a bounce from here? There could be. I mean, if you look at the SPY, in addition to the 10-day moving average, let's go back to the daily chart here, you can see that we are just a bit oversold. So a little bit of a bounce back to the upside would make sense. So a little bit bounce higher, close this gap. You can see where the 10-day moving average is. All that would really play in and make sense. Looking at the Russell, let's see that we've broken below 180 now. Nothing really matters on the Russell. We've talked about this quite a bit. You have resistance at 190. You have support at 170. You're just kind of churning in between. You want to go long if you break above 190. You want to go short if you break below 170. Anything in between there really is immaterial. So that's kind of what we're looking at as far as where the Russell is. Now I mentioned in the intro about cryptos. We normally talk about Bitcoin, which is back again below 20,000. Are they going to be able to hold it here? Maybe. So far, the bulls on crypto, or at least on Bitcoin, have been able to hold it there. We did break below the 20,000 here back on the 6th of September, but we didn't have a follow-through day. No confirmation. We broke back to the upside. Looked like maybe we're going to go up and test 24,000, but we got turned back, and here we are trading back just ever so slightly below 20,000 again. I don't think it's enough to be concerned about. We'll see if we can hold it there. But I also talked in the intro about Ethereum, something that we watch a lot. We don't talk about as much on these updates, but the expectation was from a lot of the crypto people that I associate with thought that this would be a good thing with this transition from moving to proof of work to proof of stake. But it hasn't seemed to be that way. Pretty surprising drop in Ethereum. Are we going to come all the way down and test this level here? This is a question I'd like to get your viewpoint on. You don't have to talk about Ethereum if you'd rather talk about Bitcoin, but regardless of whether it's Bitcoin or Ethereum, both of those are in danger of dropping to significant new lows. What are your opinions? Leave a comment underneath this video, if you would, on whether or not you think we can hold these levels and move back to the upside, or if this is just the beginning of more downside to come in both Bitcoin and Ethereum. I also mentioned in the intro that Fedex really sent the market on its heels with a pre-earnings warning. And if you take a look, you can see that it came out before the actual earnings announcement. It'll show up there on the chart. There you go. So you can see it was a pre-earnings warning as far as the fact that they see global weakness. So not just in the US, and boy, that sent the futures to the downside after they made that comment following yesterday's close. We're right here at 160, which is support on Fedex, but that was the catalyst along with Adobe and some other things to move to the downside. But Tesla, if you're looking at Tesla, is holding in there really, really well. In fact, if we were to just take the Elliott Wave chart off and take a look at this triangle here, you can see that we're trying to sneak to the upside. Could we go up and hit that wave 5 high? Well, this move to the downside here certainly has absorbed the selling that occurs when you have a split that's more than 2 for 1. We've talked about this before. Tesla had a previous split. They did another one that was 3 for 1. What normally happens is people that when you have a split more than 2 for 1, they'll sell some of the shares, keep the majority. So if you get a 3 for 1 split, maybe they sell one of the shares and keep 2. But there is some selling that occurs once you have a 3 for 1 split. And so that moved the stock to the downside, but we've rebounded nicely and we're trying, we haven't had a follow through yet, but we're trying to break to the upside to get Tesla up to 340. If we get Tesla up to 340, can the S&P go down with Tesla moving higher? A lot of people look to that along with Apple, etc. As far as market leaders, it'll be really interesting to see. We're at an amazing point in the markets where the next couple of weeks are going to be really important, maybe even the next couple of trading days. Looking at Australia with the EWA, we're sitting right here on this support level, right at 21. We tried to break above 22 and make a run up towards the 23 level. We couldn't do it. You can see we broke above it, but we got turned back just below 23. So now we're back at 21. Reload the guns, see again if we can turn and move back to the upside. If we can't hold here at 21, I think there's a great chance we do break that wave 3 low and head down to a wave 5 low. But I think that would coincide with the US having a breakdown further in the markets, maybe even below 380, and having a big spike in the VIX. Taking a look at Canada, you can see that Canada has been turned back, trying to break above this level of 35, which we talked about. If it could get above 35, it had an easy run to 36. Couldn't do it. Turned around, back to the downside. So here we are nearing support at 33, which did hold the last time. Couple of bounces here off of 33. So we're trying it again. If you look at the 10-day moving average, a little bit oversold. Can we hold 33 on the EWC? If not, then we're back testing these lows down here of the wave 5 below 32, but we're not there yet. So we're nearing support in an oversold condition. You would expect some sort of at least a minor bounce out of the EWC. And then gold, a lot of you have been asking about gold. Well, we had a pretty significant down day yesterday on the CPI report, but moved back to the upside a bit today. But if you go back and walk it back a day, you can see that, well, we were a bit oversold. We talked about this last night in our insiders meeting. That's the meeting that we do every Thursday night for our alert subscribers. If you're interested in being an alert subscriber, our AI-based time strategy has yet to have a losing month. Go to our website, ewotrader.com, and look at the time strategy. But we chatted about gold last night in the insiders meeting, which is what we do for our alert subscribers only. We do an extended Q&A. And a question was asked about gold, and you can see this move lower, but we're oversold in gold. I do think there's a great chance we come down and break below 150 on GLD, but being oversold, you would expect a little bit of a bounce, and we did have a little bit of a bounce higher. Might be a pretty decent entry for a continued move lower down below that 150 level. I hope you found this informative. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.